Disney, one of the world's most recognizable brands, creating world-class content and experiences. Now, if you held this stock since inception, this is how it's going for you. And this is because it's up over 13,000% since inception. But if you bought in earlier this year, year to date, this is how you're feeling owning this stock. Because it's down over 13%. And so what gives? Why is this happening to Disney? Well, you know, we had the pandemic, which sent this stock diving down, but since then it has recovered some, but then it's been struggling. And so, you know, one thing I think is a lot of people bought into the stock because it was a dividend play. It stopped its dividend because of the pandemic and it wanted to focus more on its streaming content. And so I think that is something that people are waiting to see if it comes back before they get into. But also, let's see what their recent earnings were. Now, Disney kind of had a miss. Their revenue came in at $18.53 billion versus an expected $18.78 billion. Their earnings per share were at 37 cents versus an expected 49 cents. And the subscribers for Disney Plus came in at 118.1 million versus 119.6 million. Now, Disney also stated that their operating income missed expectations, you know, pretty big, like 640 million versus 864.4 million. And of course, they said this was due to, you know, increased costs, what every other company's going through. And that the main thing is that they had to incur costs of $1 billion in fiscal 2021 to meet government regulations and added safety measures for its workers and guests. So yes, that makes sense. This company is really having to focus on safety and complying with all the new governmental rules around, you know, the pandemic thing. And so this has hurt them with their earnings. But not only that, they have some other things that are kind of worrying investors. But first, let's talk about one of their bright sides. Now, they have a lot of different things, Disney. Okay, they're in theme parks, they have their subscription Disney Plus, they have cruise ships, they have ESPN, they have Hulu, of course, a ton of merchandise. And so Disney is a, you know, pretty diverse company. I wouldn't say it has the biggest moat out there, but they have a lot of great things going for them. The one thing recently that has been going good for them is their theme parks. Now, the theme park revenue actually was one of the bright sides. They beat estimates, but they've been up almost 100% in revenue year over year with their theme parks. That is huge, especially because they're still having to deal with reduced capacity. Now, the segment's revenue grew for the second straight quarter after 5 consecutive quarters of declines. So they're finally seeing this come back and grow with their theme parks with added revenue, with becoming profitable again. I know that for me, you know, my social media, you know, Facebook and stuff, I see a lot of my friends going to Disney, whether it's just themselves or with their kids. So I do see that reflecting in the world around me, which I like to see. And that's how I like to judge a stock, right? Am I seeing it in my everyday life? Yes, I am. And so Disney, of course, over its lifetime of, you know, having these parks, they've increased the cost to get in by 3,000%. This is something that a company like Disney can get away with because you're paying for premium experience from a premium company. And so the costs have been going up, but people still flood to Disney because of what they provide. And Disney's also has a bunch of add-ons that they are starting to charge. So you want to get to the front of that line, expect to pay more than you would before. So with all these things with the theme parks, I think this is the one bright light with Disney. Of course, cases are starting to go up, so there could be some potential like worry with investors, like they might shut down again for even maybe a short period of time. But I think that'll be it, because with, you know, the shot, you know, rate going up, I think that's just going to produce an environment where places like Disney can stay open with their theme parks. Now, let's talk about something with the theme parks that a lot of people aren't thinking of. And let's look at this quote in regards to the metaverse. Yes, Disney is getting into the metaverse. So Disney says our efforts to date are merely a prologue to a time when we'll be able to connect the physical and digital worlds even more closely, allowing for storytelling without boundaries in our own Disney metaverse. And we look forward to creating unparalleled opportunities for consumers to experience everything Disney has to offer across our products and platforms wherever the consumer may be. I want to highlight that, wherever the consumer may be. What this means for me, guys, in big picture, okay, when I first, I put out a video on Meta and their metaverse investment, and Microsoft's getting into it, and I think this is gonna be a really big thing. The one thing that came to my mind, I don't remember if I mentioned that video or not, but I've been thinking about this for a long time. A place like Disney is gonna be able to profit off the metaverse in a big way, because not everybody can go and afford to pay the high prices that they're charging now. And in the future, I can see a situation where families can all put on their virtual goggles or whatever it may be at that point and be able to virtually go to Disneyland from the comfort of their home, walk around, ride rides, hug Mickey. I'm serious. I think this is something Disney is focusing on now, and that quote right there kind of proves it. So I think, again, with the theme parks, there's a lot of positive going on. That's one thing that I think is kind of holding the stock from going even further down. And so let's get into what's kind of causing them to go down. And that is going to be Disney Plus. Now, Disney Plus during the pandemic was this company's saving grace. Its subscriptions grew dramatically. Think about it, people were home, they had nothing really better to do, especially if you had kids, you had to keep them entertained. And Disney Plus was the answer to that. But now that people are going back out into the world, Disney Plus, their subscriptions have slowed down dramatically. Last quarter, they gained 12.4 million subscribers. That was huge. This quarter, when they reported, they gained only 2.1 million subscribers. That's a huge decline in growth for Disney's subscribers. And if we look at this chart I had in my last video, just to kind of compare, Netflix is still far ahead by about 100 million subscribers. They're at about 215, and Disney is now at about 119 million subscribers. And the thing with Disney Plus and why I think they're slowing down is a few reasons. Reason one is they don't have the content that someone like Netflix has, okay? When I, as a paid subscriber, am, wanting to watch content and be just kind of immersed all the time, Disney doesn't currently provide that, where Netflix does. So for example, Netflix, I can say I probably have 10 different shows I'm addicted to, and of those 10 shows, a season ends, but then another season pops up. It's kind of like this cycle. They keep you going on their platform. Disney Plus, you maybe have 3 different shows you watch, especially as an adult, maybe even less. And once that season ends, you're gonna have to wait this whole period of not having something to watch. And what do you think a lot of people are gonna do? They're gonna say, I don't want to pay for this. I don't have anything that I'm really watching right now. So Disney has to step up that content in a big way. So I think it's the content, they don't have that much, as well as this is viewed as a family content platform. And so it's kind of more limited than what a Netflix is looked at as something that's a lot more broad and diverse. And so I think Disney has to work on somehow, saying, hey, this is for adults too, or else they're going to lose a big chunk of market share. Now, Disney says they're still expected to grow to 230 to 260 million subscribers by the end of 2024, which I think, might prove struggle for them if they can't get things going. But they also announced that at the end of 2022, which is next year, they're going to be in twice as many countries as they are in now. And so think about that. That's pretty big, right? That's twice as many countries that they're able to kind of go into growth in, and that's going to be huge for them. So with the Disney Plus side of things, I think they have a ton of franchises, right? So let's look at the franchises they have. This is a plus they have for them. They have big names like Marvel Studios, Lucasfilms, and Pixar. and many more in their, in their franchise world, but those are the big ones. So they have that as a positive, but they need to grow their content, okay? And, the fact that, Disney Plus has shown this little growth now is worrying investors, but long term, I'm going to tell you at the end why I think that's a bust. I think, stockholders should not be worrying about this only 2.1 million subscribers joining now, because again, I always advocate, think outside the box, step outside and look at the big picture. So Disney Plus is kind of dragging them down. Let's mention a few other points here. So they also own ESPN Plus. Now, this was interesting. ESPN Plus added 2.2 million subscribers in the quarter where Disney Plus only added 2.1 million. So ESPN added more subscribers than Disney Plus. That's kind of mind-boggling, right? Because Disney Plus is supposed to be their flagship, staple, main platform that they're really banking on. So that was kind of an interesting thing, and maybe that's what investors are looking at and why some of them are ditching Disney. But they are going big with ESPN Plus, and they're aggressively going to start going into allowing people to do sports betting. Now, a lot of people for years have said, Disney shouldn't do this because it's going to kind of, take away from their kind of Halo-like, look, because gambling is not, some people see that as bad and not a family thing, where Disney is a family company. But Disney is saying, hey, ESPN is though we own it, they're two separate things and serve two separate purposes. ESPN is the adult kind of platform, and we're going to allow gambling. We're going to do the, sports betting, and we're going to aggressively look into it. I think this is smart, and I think as long as they can keep those two separate, they're going to be successful, plain and simple. But I think it's a very smart move. They just have to make sure they keep it separate. And they also have Hulu. Hulu gained about 1 million more subscribers. And, I have Hulu and I like it. They have a lot of great content as well. But they are overshadowed from all the other main streaming. But, they're still being successful. So Disney Plus, ESPN Plus, and Hulu together now have 179 million subscribers when you combine them all. So that is very healthy still. But they need to, again, especially Disney Plus, needs to really grow that subscriber base. So let's jump into cruise ships. Disney also has cruise ships, right? Now, this was severely hit by the pandemic, like with all cruise ships, but the thing that has promise here is they announced a new Disney Wish cruise ship, and that's launching in June of 2022 and is already 90% booked. People are itching to get out there. I see it everywhere. A lot of people are taking vacations, they're going to Disneyland, Disney World, and cruise ships are the next on people's list. They are dying to get back. And so with Disney's cruise ship, this is a part of their business that usually returns double digits on their investment. So it's very profitable for them. So I think they're excited that they're seeing this interest. And I think this will be a positive eventually for Disney once again. And I think they have a few more ships on order too. So this is an area where I think they'll have good growth. With all that said, I wanted to mention that Kathy Woods recently is buying into Disney. So when Kathy Woods does something, people watch and listen. But I think she sees something that, I think I see and a few other people see that are bullish on Disney. So I kind of want to go into that by showing you this video.
It's still going to be DTC. They're really expensive. They're really That's a great point. It costs an awful lot of money, and Swinburne himself, in this note this morning, says we expect Disney to ramp up Disney Plus content spend from about $3.5 billion in fiscal year 21 to likely $10 billion or more by fiscal year 24. They had a $9 billion forecast previously, and it's important to reiterate. Yes, we're going to measure their Discovery and the Discovery Warner tie-up and Paramount Plus and on and on. But man, it costs a lot of money.
No, I think that's a great point. I think people, I'm not saying I was surprised by this, okay? And by the way, the stock moved up 5 earlier this week. It's some sort of ridiculous belief that everything's all well. But I think that you mentioned at the beginning that I had a longer-term view. And I think that once they spend this, it'll be similar to what happened to Netflix. Netflix spent a lot when you found out they were going to spend a lot, Carl, you basically said to yourself, I got to sell Netflix, and then they spent, and it worked.
All right, so, why I'm comparing this to Netflix is because Disney is investing heavily in their Disney Plus content. Another company did that a while back. They were in a lot of debt, they invested a lot, and that was Netflix. Now let's look at their stock. Look what their stock has done within the last 5 years. It exploded. Why did it explode? Because it invested so much into their content. If it wasn't for that, this stock would not be where it's at today, I guarantee it. And Disney looks like they're doing the same thing. Now, when Netflix did this, when they were, heavily investing and had all this debt, people were like, they'll never be able to catch up with that debt. This is the end of Netflix. Well, look what happened. They are now profitable. I think they made $1.4 billion in revenue, in profit, shall I say, this last quarter. And so they're profitable now. And their debt is becoming more and more controlled. And so they invested heavily and it came out as a reward. So I think Disney is going to be the same story where they're going to have to invest in now, which I think is a must in order to have that content and to grow, to have the reaction from people. So my overview on Disney is their theme parks are going to remain strong. They're innovating. They're getting into the metaverse. They can charge a premium and people will pay it because they're Disney. And unless if we have more shutdowns, they're going to stay in high demand. So theme parks are going to be strong. Disney Plus, long term, I think is going to be huge. They are investing heavily now in it. People are seeing that as a negative, but they did so with Netflix too. And look where that got Netflix. And I think it's going to be the same thing with Disney, where as long as they're able to put out a lot of content and provide people with a lot of viewing hours, they are going to, in the end, prove that Disney Plus is a success. And so I think it's going to take a while. Of course, they got to get that content going and get it put out onto their platform. But once people start seeing it, like I said, I have about 10 shows I'm addicted to on Netflix. Once that's the same thing for Disney Plus, people will keep subscribed to that platform. And I don't think there'll be a Netflix level. I think Netflix will be the main platform, the number one, but Disney has a strong chance to become the number 2 staple in the households in the future. But they have to play their cards right and they have to produce that content. And so with their, ESPN getting into, sports betting and the cruise ships, creating more cruise ships and them having already 90% bookings, this is all, to me, great signs. I think people are being very short-sighted with Disney, and you got to take that cap off because that's gonna, screw you over every time. Have that long-term thinking. Look outside the box, look at the big picture. I think Disney is a company that if you're thinking of buying, you should buy now because it is going to grow substantially in the future. They have a brand that is like no other, and they are creating stuff, they're innovating. They are investing heavily in things. And as a shareholder, that's what you want. You want a company that is pushing those boundaries, investing, growing, innovating. And that's what Disney is doing right now. And so I think those people that are, selling out of the stock or being bearish right now just aren't looking at the full picture. And to do that, you're going to become very bullish on this stock. And I think eventually everybody else will start to get bullish on Disney again, and it's going to grow dramatically. And so I don't hold Disney right now. I would like to get into Disney. So if I have the opportunity, I will. If I have the money to do that, and I think they're at a great buying point right now. So I think Disney is just needing to get over a few small hurdles, create that content, and for Disney Plus, hopefully with the pandemic easing more and more and more, cases are going up right now, but, I think that will go right back down the more that, the shots get out there. And so their theme parks will continue to be in high demand. Their cruise ships will become in high demand. And, ESPN Plus, I think, has a huge opportunity, especially with the sports betting. And so with that said, I think for me, I'd rate Disney a big buy right now. I think this is a company that has just a lot of future growth. And so hopefully you guys like this video. And, you know, again, if you celebrate Thanksgiving, have a great Thanksgiving. If not, have a great week. I probably won't put a video out for maybe, you know, a week from now. But I've been putting out that content for you guys. I appreciate if you subscribe to my channel. I appreciate your viewership, and have a great day. And we'll see you next time on Mark's Finance and Fitness.